You have to put in the backdrop that 2017 for container flow was extraordinarily strong. And 2018 has been lapping what were very tough comparisons. So we saw a little bit of pre-shipping. People worried about the possibility of tariffs. And so we saw up 8% kind of volumes going into the ports in the May and June timeframe. We saw a little bit of a pullback in July and August because they'd shipped it early to try and beat potential tariffs. But since then, it's been re-accelerating. And then if I look at the truck market, I look at the sonar data right now coming out of the LA market, you're seeing the head haul index has jumped literally from just under 50 to 88 in just the last 4 weeks.
What is that? What is that index that you just cited?
Sonar. It's produced by FreightWaves. It's almost real-time marketplace data that's used by freight brokers and shippers and even investors throughout the U.S. It's a fairly new product, but it's real-time, almost real-time proprietary market intelligence on how many trucks are being offered and what the rates are being paid in real time throughout over 130 major metropolitan areas throughout the U.S.
Don, you touched on it a little bit, but a lot of people have been concerned about what the tariffs mean, the activity of pulling forward ahead of that, and then maybe some slowdown after that. You sound, though, like you don't think it's had a lasting impact if you're continuing to see those numbers pick up pretty sharply in September and October. Is that fair?
Oh, exactly. That is absolutely true. I mean, there's 2 points really there to be made. One of them is that if I look at the rates, let's say out of LA to Dallas is just a proxy. The rate there in just, since March has gone from $1.40 a mile to over $1.80 a mile. We've seen a 30% improvement in that rate. That's a result of incremental demand. One. Two, I like to dissect how we get to GDP. And despite all of the pull forward of potential might be having tariffs, inventories actually came down in the second quarter. They came down so much that they were a full 1 percentage point negative to the GDP calculation. That despite the shipping early trend. So if the GDP would have been 5.1% instead of 4.1% if we had not brought down inventory so much. So the in-use economic demand is way stronger than most people understand it to be.